morning. How are you? All right, let's turn down the music. Good morning. What's going on, Bubba? Bubba Forex? All right, let's get on with it. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. My name is Milton Friedman. I'm Milton Friedman. Hey, nice to see you. Anyways, what do you want to do? Technical analysis, fundamental analysis. What do you want to do? What's on your mind? You let Uncle Wayne know? Do you want to drink vegetables in the morning? It's good for you. Yeah, so we can cover that. We have claims today. We had economic data. The PMIs are starting to come out. Yep. Jackson Hole tomorrow. So let me know what to do, and we will do that. Ask questions, get involved, treat each other with dignity and respect. And you and I will get along just fine. If you have a particular asset you want me to cover, please do let me know. The value ladder goes like this. You start with a foreign exchange broker that has a symbiotic relationship with you and does not trade against you. That is Trader's Way. I recommend them. Check them out. Then get some training. We have training courses, $88 for 88 hours. Yeah, that's not bad, huh? Yeah, it's great. What are you talking about? Learn how to plan trades, swing trading 100 to 300 pips, Forex basics, principles of price action, introduction to Forex, complete guide to MT4, MT5, central banking essentials, day trading methodology, understanding macroeconomics, so on and so on. The oil, dude, this is worth $500 just this one course. Easy. $1,000. Easy. Okay, $88. Cool. So now that you have been trained, right? Probably want some fundamentals. QuantBox automates all that. Beautiful. 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 This will tell you why the markets are moving. Help you plan in advance. Help you know what's going on. And TRADARS helps you with your technicals. Okay? Very cool, right? Yeah, so what does that look like? Looks like that. Hey, it does technicals. But guess what we're doing? We're moving QuantBox over. Whoa! So QuantBox is now the fundamental analytics section of TRADARS. We have scalping. Okay? So there's a little scalp on gold right now. The probability of 68%. Well, what about crypto? There's a little Bitcoin, a little move to the upside, 64%. How about Forex? Oh my God. Oh, whoa. Hey now. 72%. Hey man, show me everything over 75%. Okay. Now they're just skippity scalps. They're only like little tiny moves, but that's what scalping is. What about stock indices? Oh my God, what about individual stocks? Whoa, dude. Yeah, so anyways, we have scalping. We have volatility, event-driven strategies. Sometimes this is a little slow. There's a lot. There's years of data that goes into this. So if you ever get stuck, sometimes just a little refresh helps. Watch. As soon as I refresh, you'll see it. Watch. Yep, there it is. See? There it is. So anyways, yeah, we were talking about this earlier. How about French inflation year over year? What? Okay. What? We have all the data, dude. We have all the data. Crazy. And courses. Okay. Yeah. I have to change that. That doesn't work anymore. Courses and coaching. There's our meeting rooms. And community. Now in our community, we can chat with each other. We can post to each other, get feedback from each other. We can do live events. We can do challenges. Okay, I'm still setting everything up, but we've used it before, and it's pretty cool for us communicating. We even have leadership boards and stuff like that to show who's most active and who's most helpful and that kind of stuff. I mean, dude. So that's where everything's going. Everything's going there. And there's some talk that we should create a news trading service that runs 24 hours a day. So I might set that up if you guys want to do it. So Grass Military says, hey, how does manufacturing being down in the United States affect the U.S. dollar? Okay. And future rate cuts. Well, does that indicate a slowing economy or an expanding economy? So I changed the unemployment claims structure. Maybe this is a little easier. This is a more traditional way of explaining what's going on. So we have the expected and the actual, right, in bars. And then we have revisions in red lines and then average. Okay. That's right. So those that said, going back to Grass Military's question, if manufacturing is slowing down, then the economy is slowing down. What does the Fed do when the economy slows down? Raise interest rates, cut interest rates. Which one? Anybody? Hakeem, the technicals or fundamentals? Emmanuel, it charges you every 30 days. So if you sign up on the 15th, you get charged on the 15th, 30 days later. Okay. Both what? What's the answer? What? Both? Oh. Let's see. Let's see, I don't have any email here. Hang on. Lovely, with your smile so warm. Okay, well, let's see. So 9 hours ago, I got this report, the TRADARS Market Open Report. Still says QuantBox in some places. We have to transition that over. We're working on that now. And then recently I got this one. Let's kick this out. These are all the fundamental alerts that I'm getting throughout the day. So we got those. And so you're saying the technical ones are not coming out? Well, let's see. I'm getting the scalping alerts from TRADARS. Okay, so these are coming out. Okay, those are the real-time AI, real-time TRADARS alerts. So you're saying the technical ones aren't coming out? Do I have it on? See, that comes out through a different service. And let's see if I have it here. I don't know what email address I have for that. TRADARS. I have to, so yeah, okay, so the only one not coming out is the TRADARS Market Open. The technical market open. Is that right? Yeah, interesting.
And looking at spot gold here, just making you continue to see some weakness creep into spot gold here. It did move below yesterday's low of 2494, continuing to dip beneath that 2490 level, currently at session lows of 2486.
So they're called Market Open Report US Session. So let me search for that and see what happened, because that would, I think that's an execution error then. Yeah, you're right. So it hasn't done that for a couple of weeks. Okay, so that's probably MailChimp. So we have everything written and then sent. So it's written on one server, sent to MailChimp on the API, and then MailChimp sends out. So why did they stop? Okay, thank you. All right, got it. I'll follow up. But all the other stuff's coming out, which is interesting, though. I thought this would be the same server. But you see MailChimp right there, MailChimp app. So for some reason, the daily summary. All right, so that means it's our server side issue. Okay, well, that's helpful. Thank you. Yeah. Cool. So looking at the weekly jobless claims, what you see here is because
making you aware in around 10 minutes time at quarter to the hour, be on the lookout for August's S&P Global Flash PMIs. By way of expectations, the Flash Manufacturing PMI is expected at 49.6, which is unchanged from the prior. Services expected at 54, the prior coming in at 55, and finally composite therefore expected at 53.5 from the prior 54.3. And just by way of calendar-wise, ISM manufacturing is due on September 3rd, with the services figure due on September 5th.
So this is the news service. It's saying, hey, get ready for the PMI coming out at the top of the hour. It's a good heads up, though, isn't it? Yeah. So because this is a database, I was able to change this so we can go all the way back to COVID and see the unemployment improving. Right? Look at that, huh? The average over that period is 500,000. That's crazy. And now I like to look at revisions. I think those are the real numbers. Kind of nice, right? So you can change this. You can say 18 months. Okay. Isn't that nice? Over the last 18 months, the average is 221. Now, for a lot of analysts, what they want to do is give you the 3-month or the 6-month or the 12-month average. So you could just check that yourself very quickly. Okay, 3-month average, 233. Okay, cool, right? What about the 3-week average? Okay, 235. I mean, it's beautiful, isn't it? I mean, seriously, to be able to do this on your own. Well, Favor, you can do that yourself anytime you want. This is what's going on now, and what we're seeing is it looks like a pretty decent average decline. You know, the trend is going the right way, and this allows for the Fed to cut interest rates in September. So now the big thing is the PMI coming out at the top of the hour. Okay. And doesn't matter. Yeah, like, do you guys want to look at it? You're like, wait, what? You have the data? Uh-huh. Yeah. So anything less than 50 on services is bad. Okay. So we want to stay above 50. Anything less than 50 on services is a contraction. We also have data on PMI manufacturing, And, ooh, how did that happen? Growth decline 88. Well, anything below 50 is a recession. And so we're already in manufacturing recession. I had the database open. I wonder if I can quickly fix that. I don't think I still have it. Do I have it open? Not there, not there.
And seeing some comments here from Fed's Harker, does knows it's ready to start the process of cutting rates and wants a gradual methodical course of rate cuts, and current monetary policy is in a good place and it is not overly restrictive, and the end of the easing cycle may put funds rate around 3%. Business contacts do favour a predictable pace of easing, and the end of balance sheet drawdown is determined by the market. He adds, markets have already moved to price in Fed action, and inflation is moving down but will take some time to get to 2%. And on that job market, he does note it has now mostly normalised. So very much in fitting with the general Fed rhetoric here, noting he's ready to start the process of cutting rates. And do note on the back of this, Fed pricing is minimal change, currently 32 basis points priced in for September and 100 by year end.
Hang on, I think I have time to fix this. Come on. Pages. Where's the PMI? PMI manufacturing. Yep, PMI manufacturing. And then I gotta go here. Then I gotta go there. And I gotta find that. So the growth decline is off. I gotta find that part. Growth decline 88. The value should be 50. And I want to make that line black, not gray. Probably too late for that. It's supposed to be black. Says it's black, but it's not. All right, so now I can go to fundamentals, PMI, and this is coming out soon. There, I fixed it. So anything below this growth decline line is contraction, aka manufacturing recession. Pretty cool, right? But I don't know why that growth decline is gray. Trying to make it black. Says it's black is the issue. Wonder if I can force it to a different color. Yeah. And then I put it back to black, let's say.
And in 1 minute's time, of course, to the Alpine lookout for the S&P Global Flash PMIs for August. Manufacturing, that's expected at 49.6, which would be unchanged from the prior. Services expected at 54, the prior came in at 55, leaving the composite expected at 53.5 from the prior at 54.3.
It just will not draw that line black. How funny is that, huh? I can make it blue, but not black.
Ten seconds.
Oh, I'm so excited.
Manufacturing 48, manufacturing 48, services 55 spot 2, leaving
Little
the
lower.
composite at 54 spot 1. Has manufacturing PMI there, falls to 48, beneath the expected and prior 49 spot 6, and also outside the bottom end of the forecast range. Meanwhile, services, that comes in at 55 spot 2, above the expected 54 and slightly above the prior 55, leaving the composite at 54 spot 1, above the expected 53 spot 5, albeit slightly lower than the prior 54 spot 3.
All right. So same, only different. Same, only different. Cool. Still manufacturing contraction, still services
Just
expansion.
going through now regarding some of the commentary, it does note the solid growth picture in August does point to robust GDP growth in excess of 2% annualized in Q3, which should help allay near-term recession fears. And it does also note that the key takeaways from the survey are that inflation is continuing to slowly return to normal levels, and the economy is at risk of slowing amid imbalances.
Cool, right?
Just making you aware, in wake of the data, did see a knee-jerk lower in treasuries, albeit has now paired all of that move, with dollar also moving to fresh session highs of 101.46, albeit now back towards that 101.40 level.
Ooh la la, huh? What do you think? Gold on the move. Silver on the move. Okay, so why the negative tone? Does anybody know? What about rate cuts? No. What do you mean? Not at all. So, okay, according to our news squawk, we expected 53.5, but we got a 54. It's the opposite, Abdul. This economy, the service economy is crazy good. Better than expected. Well, that's harder for the Fed to cut. No. The exact opposite. Yeah. However, the balance on the key takeaways from the survey are that inflation is continuing to slowly return to normal levels and that the economy is at risk of slowing amid imbalances. This soft landing scenario looks less convincing, however, when you scratch beneath the surface of the headline numbers. The solid growth picture in August points to a robust GDP growth in excess of 2% annualized in the third quarter, which should help allay near-term recession fears. It's a good number, Abdul. And so why would the Fed need to cut interest rates if our service economy is booming? Do you know what percentage services is in the economy relative to manufacturing? Yeah, that's right, 70%.
And in 10 minutes time on top of that, I'll be looking out for further data. Out to the US, we're waiting July existing home sales expected at 3.93 million from the prior 3.89 million. While out of Europe, we're waiting Eurozone, a flash consumer confidence for August, expected at negative 12.6. That's from the prior negative 13.
So imagine you had this running all day and all night. Think of it. There's real people watching the news 24 hours a day for you. How much you pay? Okay. This could be a little dipsy-do. You see it? Richard, the revisions were 800,000. Yeah. Cool. Let's go over to the indices. See what's what. A little bit of dollar strength, but pay attention to the roll reversal. Little bit of Swissy strength, little bit of yen strength. That's all risk off. Okay. Pound's got a bid. Well, we know that. We've been training it for 3-4 days now. Aussie's down. We know that. We've been selling it. Kiwi is stabilized, but is so that's a giant maybe. Okay. CAD we've been selling. It'll be interesting to see what happens now. Right? Okay. Quite a bit of mediocrity in the moment. We can check the gauges. Nothing's changed. Lots of mediocrity, everybody. You should be careful. Dollar strength. Why? Why dollar strength? The economy is doing gangbusters. There's no need for the Fed to cut. They definitely don't need to cut 50 basis points. They don't need to cut 100 basis points by the end of the year. There's no panic. The panic's over, everybody. The sky's not falling. But they'll still cut in September. But as Richard says, probably not 50 and probably not 100 by the end of the year. Maybe what I said before is, if you go way back in January, I said one cut in July and one cut in December. I still think that was the right decision, but the Fed didn't do that. So now what I say is September, 25 basis points, December, 25 basis points. Every other meeting. So that's only 50 basis points this year, not 100, not 75. So anyway, the dollar was overly weak. And now it's a little bit strong. But I would say fundamentally nothing's changed. So your big question is, are you going to buy the dip or is this a top? Well, you don't know yet if it's a top. It kind of smells like it could be. Check the other time frames. Okay, check all your other time frames. What are the prices you might be interested in buying? Okay. Look further out. And the next one is sort of down here. Okay, so that's a long ways away.
And folks, just acknowledge we are seeing a bit of upside here in MATA Meta platforms. Not seeing any news, although some traders citing options buyers for next week. Apparently 3,000 for the 550 calls early between 460 to 470 were traded according to one.
Okay, so hails bales. Maybe it's just time. The other thing you could do or should do or must be doing is looking at these higher time frame pivots. You could keep an eye on stuff like this. And what does that tell you? Hey, is this random? What do you think? Is that random? Amazing, huh? Well, that's an annual. That's an annual pivot. Amazing, huh? Oh, what did I say? Yeah, please point it out if I stuck my foot in my mouth. It's plausible. On hell, it's in the templates. But what you do, if you want to know how it's done in the templates, it's super easy. Okay? You add multiple pivot points. Let's do this one. Let me move over to the Confluence. Confluence. Okay. Cool. Pivots, bias pivots. And each pivot, that's weekly, that's monthly. But it's in the templates that I give you at Investor Bootcamp. LE says, how do I learn about them? Oh, I don't know. No, I don't know, but they've always been there. Yeah. Yeah. Yeah, LE says they only know standard. Well, that just means they just don't know. So I've been trading this before anyone talked about pivot points.
So a little over 1 minute now, it's the top of the hour. Existing home sales July data expected to tick up to 3.93 million from 3.89. Eurozone consumer confidence flash data for August expected to improve ever so slightly to negative 12.6 from negative 13.
So when I first started, there was a guy named Peter Bain out of Canada, and you would pay him money, and every day he would tell you the pivot numbers, but he wouldn't tell you how to calculate them, and there were no indicators back then for such a thing. So I thought that was all dumb. And then I got a copy of his training course, which was totally stupid. So I decided, well, I'm going to teach myself and all that, and so I did, and then my charting package didn't have it. My broker didn't have it, so I paid to have it custom developed. And once I custom developed pivot points, I gave them to FX Bootcamp members for free. And then the broker called and said, oh my God, we're getting so many people trying to sign up for our pivot points, and we don't even know what those are. And then they say that I'm teaching them. So I gave them to the broker for free to give to the public for free.
It's 3.95 million from a revised 3.9. So it ticks up to 3.95 from a revised 3.9. Analysts had expected 3.93.
Okay. So,
And Eurozone economic consumer confidence flash for August, negative 13.4. We had expected that to rise slightly, that falls slightly from the prior negative 13.
that's interesting. So mortgages have come down, and for the first time in a long time, they actually sold some old houses. Okay, Sky Killer says, Pig Dog, we were talking about standard deviation. Do you remember how long ago that was? Probably use this one, Pivots Dollar. Yeah, this one? Yeah, so this one here, right? Yeah. Amazing. Thank you. I love it when you tell me I'm amazing. I'm an only child. I love it. Yeah, tell me more. Tell me more reasons why I'm awesome. Yeah. Yeah. So anyways, yeah, cool, right? Cool trick. The thing is, what I don't want you to focus on this. Let's do this in pink. I don't want you to focus on this. Okay? What I want you to focus on is this. I don't give two hoots about this bottom one. Yes, we brought it up. And look, higher high, higher low. Yes, if you were... yeah, is that tradable? Sure. But that's not what I want you focused on. Over here, plan B, so we'll call that plan A. Plan B, what I want for you is to never miss this. I want plan B for you. So I'm not interested in perfect and trading against moving averages, and it's all high risk. Who cares? Okay. What I want for you is to notice somewhere in here that it's happened and then respond appropriately. Okay. So don't worry about the perfection. You don't have to be perfect, but you do have to be able to do solid analysis, right? That's what I want for you. Okay. Well, Favor, did you look at the weekly seasonality? That might help you. Also, we're going to have a rally in the third week of November, and that could skew things a little bit. We might start the year hot and then cool off. But I don't know. I'm still going to buy in sort of March, April, May. Okay. Okay, so now it's just like we're in a caution zone, and I already have it all marked. Like we've known this for quite some time. Now we're up here, and there were some great opportunities to trade off the daily pivot. So day traders, so like this trade I just showed you is equivalent to a swing trade. Remember we were talking about scalping? I could take that trade on a 5-minute chart and it doesn't change a dang thing for me. I'm going to stay long for long. Long for longer. Okay? But day trading inside of this now is, like there's an opportunity there. Okay, there's an opportunity there. Maybe there was an opportunity here. But now what? Yeah, now the risk is increased. So if you're only getting involved now because it's been up for 4 or 5 or 6 days, then it's one of these things like, why are you 4 or 5 to 6 days late? You should be on your 18th pound dollar long, and you're thinking more about taking profit than entering. Okay. So Mikhail, are you worried about the drawdown, the buildup of oil inventories in the United States yesterday? That supply of oil in the United States went up. Are you worried about that? Okay. Okay. So why are you buying oil if supplies are rising? Because an increase in supply lowers prices. So why are you buying before we look at it? You bought a double bottom. So what? Why? I'm challenging you first, then I'll look at it, but let's talk about it. The technical analysis to me is boring. It's so easy. Knowing to buy or sell that's the conversation. Good. No. That's technical analysis. You have to give me a solid why. Why would it go up? If supply went up, it should go down. If supply is going up, you would never buy a support because fundamentally that doesn't make any sense. So I'm not saying you're wrong, but I want to know why. I'm just asking you, why do you think it's going to go up if an oil inventories are growing? That would suggest down. Now, if I'm hitting you too hard, just type in a question mark. But I am trying to make a point. Like, I don't give a crap about a double bottom on support. There's no support. If inventories are rising, this thing's going down, and I mean down to we talked about this 3 weeks ago. It's going down to 52 or something, 55. We're only at 72 today. So again, give me a why, or give me a question mark if I'm beating you up. Beating you to death. Okay. You have to give me the why before the what. A double bottom. So what? You're always going to double bottom. Even in a downtrend, you're going to hit things like that. Doesn't mean buy. Okay. Mikhail? Now he's not giving me a question mark at all. Not even a question mark. Yeah, okay, that's good. That's even better than a question mark because psychologically it's a better response. Okay. Last night, or yesterday afternoon, Canada announced from its 2 largest railroad companies, strikes. One of the things they ship is heavy crude oil from Canada to the United States. Okay? And therefore, the future supply, not the current supply went up. We know that. We got the number yesterday. So logically, you would sell it. But as of today, as of last night, the market learned of the rail strike in Canada.
The BCB Central Bank Director Gillian says higher global uncertainty and abrupt FX moves require monetary policy caution.
And that's your why.
And just note, Fed's Harker seems to be doing the rounds this morning. He says job market is softening from a high level. It's heading back to normal. Job market revisions were not a surprise. Just echoing some of the comments that we've heard from him earlier in the session.
We'll do it this way. Okay. Well, Richard, it would be a time frame issue. So, he's not wrong. Mikhail's not wrong on the double bottom. But in this case, yeah, in of itself, I mean, look, when you look at it here, it's just another bottom. When you look at it with weekly and monthly pivot points, it is correct. Okay. But I want to know fundamentally why, not just
Fed
that.
Harker says that the balance of risks is more normal. The Fed must watch jobs more from now. Again, very much in keeping with the general line we've heard from the FOMC.
So Mikhail, you're like, I bought it on a higher low on a 5-minute double. But you still have to start with why.
Want methodical course of rate cuts.
And now if you're like, well, monthly M1 and weekly S2, and yeah, but you're counter trend trading, and I don't like counter trend trading. So I teach you how to counter trend. I taught you that trade, but I told you I often don't. It's closer to rarely do I counter trend trade because I'm a trend trader.
Harker says the course of Fed action is more important than the size of moves.
Okay. So in this case, though, Emmanuel, what I'm trying to say is Mikhail is correct. Now, his technical analysis is perfect. That's a perfect trade. But it's sort of an empty trade until you have the fundamentals behind it. And then you're like, well, oil's coming down. Well, there truly is a threat to oil supply now in the United States. There is. It is factual. But if Mikhail doesn't know it, then it wouldn't have gone into the trade plan.
And just a quick market update here. We're just seeing ES futures just go flat now for the session, giving up some of the gains after the cash equity open. Again, while we're not seeing anything explicitly hawkish from Fed officials, just before then, Fed's Harker says we will not comment on market pricing of Fed action. The Fed officials do seem to be just towing the line today, and that gives some people a bit more confidence that they're coalescing around a 25 basis point move, and we're not going to get anything like a 50 basis point cut in September. Again, we've also had some data today. Jobless claims were stable while we saw the composite PMI tick up. So it might just be strengthening the case for 25 rather than 50. And again, this might be the rationale ahead of Powell's comments due tomorrow, where many expect he'll reiterate what he said post-July FOMC and the sentiments contained within the FOMC's meeting minutes that were released yesterday evening.
All right, guys.
For Powell, just a reminder, we do have a primer up on the newsfeed for those who wish to get briefed for his remarks. They are due tomorrow around about this sort of time, 10 a.m. Eastern.
All right, look. Did you just get that tidbit that they've been watching the news all morning and all this news came in and they're watching Fed speak and he's like, yeah, so the way it's going down is that it looks like 25 basis points, not 50 basis points, and that's why the dollar's strong. Like, look, that's something I said 20 minutes ago. But he just said it now. I can't be here 24 hours a day. So imagine you have a service like this running 24 hours a day, not just watching it, not just reporting it, but also explaining it. Dude, seriously. So all I have to say is that just happened.